Greetings and welcome to the Siyata Mobile webinar. It is now my pleasure to introduce your host, Daniel Kim. Please proceed.
Good morning and thank you, everyone. Thanks so much for joining. I appreciate you joining on Thursday morning. So I am presenting Siyata Mobile, a company that I've known for about 6 years. Quick introduction on myself. I've been in investment banking for 25 years. I met the company when I was an analyst with my predecessor employer called Paradigm Capital. We were institutional boutique, the #1 tech and mining boutique in Canada for a number of years. So I had the good fortune of meeting this company and its team back when I was an analyst, and I launched coverage. I loved the opportunity that they were facing. They were disrupting a market which I thought was quite unique. 2 years ago, I resigned from investment banking and was fortunate enough to join Siyata as a board advisor, and more recently came on full-time as a VP of Corporate Development. So with that, I'll jump right into the presentation. Slide 2 is our disclaimer, and then jumping right into who Siyata is. So just to give you a quick background of who this company is and what the market opportunity they're addressing. In 2011, Google acquired Motorola and shut down a number of its business units and sold some to other parts. One business that shut down was called the Enterprise Division of Motorola, which manufactured in-vehicle communication devices. They were the world leader at the time. They had shut down their 2G assets, but a lot of the engineering was being done in Israel. And so my CEO is likewise in Israel, had hired the core engineers from Motorola and rebooted that business and developed the next generation 3G products. He had taken these in-vehicle devices, launched them within the Israeli market with great success, and that was when I met the company. He had planned to then expand into international markets and come into North America. It was over the course of time that the company continued to innovate and deliver a number of new products, and its real niche in the market is something called push-to-talk over cellular technology, what we call PTT. What this displaces is incumbent legacy land mobile radio. Think of your CB trucks in 18-wheeler trucks or inside a taxi, something with anything with a dispatcher unit where you're talking from one to one or one to many. That is old analog technology that is being rapidly replaced by digital push-to-talk over cellular technology. The real catalyst for change came with 9/11 when it became apparent that police, fire, and ambulance could not communicate with each other with this legacy technology. In fact, police departments across even the same jurisdictions could not communicate together, so it was a real problem. So the government put out to tender a massive bid to completely change this technology. AT&T won this contract. They're investing $40 billion over the next 25 years, and they have a dedicated bandwidth. It's referred to as now FirstNet. It's a separate company with AT&T, and they are aggressively now deploying this technology. They built the infrastructure to provide the connectivity within their own cellular network, and they are now pushing the handset growth pretty rapidly within the market space. We are, of course, quite small at this point. A lot of our revenues and our profits, our growth has been based largely in Israel, and this is legacy 3G revenues that have been volatile in the past, and there has been a transition now towards 4G. So if you look at our market cap today, it has declined somewhat based on these legacy revenues. Now with a market cap of only just $1 million, enterprise value just a little bit over $20 million. Based on what I've seen in my career, I think based on the success the company has had to date and the revenue generated to date, one of the most inexpensive stocks I've ever seen. And now switching over to slide 4, in terms of the key highlights and what I'm going to talk about the company through this presentation is, despite the fact that we entered this market about 5 years ago, we are still the only provider of vehicle connected devices. There are a number of competitors in this space that play on the handheld side, and of which we compete in that area too, but we still are the only within the space, remarkably. Number 2, we have transitioned our entire product portfolio from 3G to 4G. 3G products within Israeli and international markets tend to carry a much lower margin profile. However, moving into 4G products in North America, our margin profile is changing quite dramatically. Just to give you a sense, our historical 20 to 25 to 30% gross margin profile in international markets is now transitioning to North America with 35 to 40% plus type gross margin, so a pretty dramatic shift. We're entering obviously a much larger market opportunity within North America. This is a multi-billion-dollar market opportunity just in U.S. alone. And our backlog, which I'll touch upon, has doubled year on year. And with regards to COVID, it has certainly had an impact on our commercial side of our business, but business with FirstNet continues to be quite robust, and we're seeing some great opportunities. And lastly, I'll just touch on our operating leverage. We only have 25 people in our company, and we anticipate, even with the growth that we hope to see in the coming years, that will likely top out at only 30 people. So we think there's lots of operating leverage within our cost structure. And then I'll close out the presentation talking about our management team and board. This is a picture of our entire product portfolio, segmented into three broad product categories, and we have various technologies to approach the market in both the high end and the mid end and then the low end in each of our product categories. So on the far left is our in-vehicle device. This is a device that is hardwired to a vehicle, commercial or FirstNet. And this is a large market opportunity, roughly 23, 24 million vehicles within North America alone. And we're just ramping this business unit up with these products. In the middle, you have the rugged handsets. These would be companion devices to our devices on the left with the vehicles. Even larger market opportunity, 47 million potential enterprise and task workers. What I would say here is this is a market much more competitive. However, we're in with a unique product offering with features and functions that are designed specifically for that market segment at a much lower price point than our competitors. And the area that's been a real surprise for us this year has been our cellular boosters, which has been a solid business unit, not a lot of growth in the past. It's been largely revenue focused in Canada and online sales, but with the work at home, with the pandemic, we just had a record sales in July, with sales growing 50% year on year. And it looks like we anticipate that type of growth may continue going forward with continued strength in the product offering as we expand it to North America. So taking a bit of a closer look in terms of what our product offering is. So on the previous slide, we talked about our flagship product. That's called the UV350. So if you look on the picture on the left here, this is what you would typically see in a cab, in any commercial vehicle, in fire, police, or ambulance. There are numerous different technologies that have come together within the vehicle. There's a navigation system. Typically, there's a corporate phone, fleet management tools, which could be software only. And then there's legacy land mobile radio solutions that are being replaced by our digital push-to-talk technology. And these are they also typically have a separate CAN bus that connects to the onboard computer in the vehicle. In some, those hardware solutions will cost anywhere from $5,000 to $7,000, and you would typically pay a third-party fees of roughly $5 to $40 per month to provide connectivity for your land mobile radio connection. That is a market that is, however, in decline as this push-to-talk technology is taking over. Our picture on the right. And what our solution does is it consolidates all those pieces of hardware into one device, and that is the solution we are now seeing great success within the North American marketplace. A closer look at what is happening within this system and why customers are turning to us. Land mobile radio is an analog technology. You can either own your own infrastructure, which is very expensive to maintain, lots of CapEx. But of course, if you, for instance, manage a school bus and you go into a different zone, you will not have ability with other land mobile radio jurisdictions, so you would have dead zones. Same thing happens with police and ambulance. So it really is a limited technology, expensive to maintain, in fact, even difficult to find technicians to upgrade your systems, and that's what a lot of our customers are telling us. So what we've had what we've introduced is a flagship device. This is called our Uniden 350. It's an Android operating system designed specifically to operate in noisy environments. So think of the reason why Polycoms tends to dominate boardroom tables. It has excellent noise isolation, loudspeaker. You don't put your iPhone in the middle of a boardroom table and carry on because it just simply is not designed for that. It's purpose-built. And much like our device, it's purpose to operate in vehicle in these loud environments. It is hardwired to the battery, so it's always on. It works in a wide temperature range, so you turn on your vehicle, it's always powered. There's no reason why this would never work. And we have dedicated buttons for push-to-talk over cellular, and you could download apps for your fleet management tools or any of your scheduling tools. And this is where we're finding terrific success in the marketplace. So why do customers like this? In terms of CapEx and OpEx versus owning your own land mobile radio infrastructure, obviously significantly lower. Why do customers like AT&T like is they now have the ability to capture significant new ARPU, of which they never had an opportunity to do so. When you replace your land mobile radio, you can grab a new SIM card, and we've had terrific success. A perfect quote from this is on the bottom here. Fairfax County, Virginia, where they saved $16 million in upfront costs and more than $2 million annually in just maintaining their old systems. So we're finding this the carrier channel a terrific channel for us, and we're working with all the major carriers in North America and finding much improved traction. In terms of where we see our competitors, of course, you could take your phone, and there are use cases for your phone, but in many markets, your phone within vehicles is illegal, and you're not permitted to touch it. But our device, because it is hardwired, is permitted. In the middle, two-way radio, that's the land mobile radio. Of course, you can have rugged tablets, but they typically do not have voice capabilities. And in the last column, you have modems, but you need companion devices to make that work. Our device consolidates all the requirements of this market into one uniform device, which costs $50 US, and it's much more easy to maintain. So what we've seen in the last year is our total sales opportunity pipeline, which we define as both prospects and proof of concept, has doubled to $42 million year on year. We've been able to achieve this by in the carrier channel. Right now we're approved with AT&T, separately with FirstNet, Verizon, Rogers, Bell, and Motorola Solutions. Coincidentally, Motorola, as you recall, had sold that division, but today they are Motorola Solutions is the largest provider of mobile radio. They do not have a solution within the push-to-talk arena, and we are working with them into their channels to provide them with our solution. We expect that it's interesting is we were only qualified with AT&T in mid-2019, with Verizon at the very end of 2019, and our sales pipe has grown as a result of us hiring a dedicated team to manage the AT&T account just in Q1 of 2020. Hoping to replicate that success with Verizon shortly with potential hires on that front, and we expect that our sales pipe will continue to grow as a result. Shifting over to their handset side, pictured here are our two rugged handsets, a phone on the left, and we have a tablet-style phone on the right. That is, these phones are designed specifically, again, for FirstNet. You'll see there's a dial on the top. Those are push-to-talk dials that can change channels, and we have dedicated buttons. These are ruggedized phones. They're waterproof, have built-in loudspeakers. And what we're finding is, generally speaking, you typically need one device per vehicle that is hardwired, but a truck, as an example, will have multiple drivers per vehicle. And what AT&T has told us, it would be very helpful to have a companion device that drivers would then carry, because you often need to communicate directly with the vehicle, but often with the driver as well. So having a companion device has been a great advantage, and we're hoping to enter the North American market within the years. Our historical sales to date have all been in international markets. Within the competitive front in arena, you do have a player in space, players like Samsung, Kia, Sierra, Apple, Sonim, of course, are larger entities. But generally speaking, companies like Samsung and Apple would take their current device and put a rugged skin, install push-to-talk software, and sell it, attempt to sell it into these markets. But these are niche markets for these larger players. Samsung does not really have much of an interest, I believe, in selling 200,000-300,000 units into these niche enterprise markets. Their smaller runners like the Note 10 typically run at 10 million units a year. Their flagship products typically run at 50 to 60 million a year. Those get a lot of attention. Sonim, it's within the handheld market. We are competing with them, but with a much lower price point, and we are still alone in the equal side. Apologies, these slides are moving a little bit slow. Shifting over to, oh, my apologies, here we go. Our booster side of our business. We have three variants of our boosters. Right now, the majority of our sales are coming through online sales. And that's primarily been in Canada through Amazon, etc. You can install these boosters. You can literally order these online, install them yourselves. You put an antenna on the top of your house, and these will grab any weak cellular signals and reboost those into your home, so you'll always have 5 bars. And this has become quite important, of course, from the whole work from home during the pandemic. We also provide boosters that work in vehicle, and you can do the exact same thing within fire, police, or ambulance, or any commercial vehicle, and provide better connectivity, which is critical, particularly when you're in rural areas. Our latest to our UV350, so it'll be specifically working within that arena, providing added activity for workers. Within this space, there's competition, of course. This is a large market. The biggest competitor we have is in Wilson. They provide a product called WeBoost. What's unique about our value proposition, much like our other product categories, we primarily work through the carrier channels, and there are only two vendors that we hope to be able to launch in the American market shortly with some unique solutions, working with one of our prime carrier partners to provide solutions within that space. There's only one other company that does that, and that's on the bottom of this page. That's Nextivity. And they sell a significant amount of boosters within the FirstNet market. I believe that's going to position us quite unique within the market. Shifting over to our financials, as you've seen, we've generated just under $80 million to date. These are all in Canadian dollars. That can mean when there's with our products. As international markets, the demand for 3G products has been in decline, and our transition to 4G has happened. You'll see a decline in revenues from 2017 to 2019. More recently, in our Q1 results, while our Q1 numbers were flat year-on-year at $3 million, we did see a much improved transition to North American-based revenues. So our gross margins improved to 32%. That was 4 percentage points higher year-on-year. The loss improved likewise. We're hoping these trends will continue for the coming quarters as our traction with North America continues, and we expect that we'll be announcing Q2 results in the coming weeks, in the next month or two. Quick snapshot of our balance. We typically operate with anywhere from $1 to $2 million of cash and $10 million of working capital. We have 125 million shares outstanding. We just announced that we raised $2.1 million, so at 10 cents, so that adds roughly 21 million shares to our basic shares outstanding. So this is pre-issue. More recently, if you look to the very bottom of that page under debentures, we had $1.3 million in debentures due in June 2020. We just had two large shareholders refinance those, and we pushed that out in 2021. So one of our largest shareholders reinvested $1 million. The debenture on the very bottom there for $7.9 million, which is due in November 2021, which converts at 45 cents. That was done with multiple large mutual funds in Canada. Mark Seelenfreund is our founder and CEO. He was the gentleman that started the company, saw the opportunity with Motorola, has been in the telecom industry for decades, and has been leading the charge and has been really driving for this company. Unfortunately, he could not be here for this, so this is why I'm hosting this call. Jerry Bernstein, our CFO, likewise has been with the company for a number of years, has multiple years of experience, and has been a public accountant for decades and has been a terrific asset for the company. Kennedy leads our international sales. In fact, he came from Motorola and worked with Sonim, so he has lots of great insight into our competitors and some of our key customers, and has been terrific in growing international opportunities. In fact, we announced recently that we are now selling to a major telecom carrier in Australia. So despite Israel declining in 3G sales, we are seeing growth opportunities in both Europe and other international markets other than just the US and Canada. If you look at some of our other key members, Kitty, our VP of Technology, has been with the company for about a decade and has been the key driver for all the product development in all our key categories. And Brian Budd is one of our key board members, has been an entrepreneur and in various management roles for 25 years. Likewise with many of our other board members with lots of deep experience. Richard Hoy, 30 years in telecom, more recently with TELUS. We have Stephen, who's been in 20 years in telecom and has a depth of experience at various Canadian telecom companies. And Michael Crone, 20 years in experience and chairman of various other companies. So in closing, what I would say is to date for the company, for the first 5 years, it's been a process of building the 3G portfolio, expanding into international markets, then launching a new portfolio of 4G products, and qualified with carriers was a real push up until 2020. All of that is now behind us. The focus for the company now is continued organic growth. We have our sales in place for some of our key carrier partners. We hope to have our next team in place by the end of this year to address other key carriers within the North American market and continue to push for top-line growth and hit profitability metrics hopefully by the back half of this year. Given our lean cost structure, our break-even is only $5 million per quarter. Our cash operating costs are only $1.5 million per quarter. And we're hoping through continued penetration into North America with improved margins, with better pipe through multiple programs, and then launching our rugged handsets and boosters more aggressively into North America, that we can see some strong organic growth and achieve profitability in the near term. Longer term, what we'd like to achieve is $30 to $50 million in profit. We would hope we can achieve that in the next year or two, if all goes well, assuming that things modify with COVID and the pandemic and business starts to return to normal. And with that, we can generate roughly 20% EBITDA margin based on our current operating model. That's it from me. And with that, I'll take any questions if I have any. And our first question: your stock has not broken 50 cents in the last 5 years. What do you think will drive shareholder value and potentially help the stock price most? Thank you for your question. Well, as I suggested, in the past, the company has been transitioning from 3G to 4G. 3G products carry a much lower margin profile. We are a small company with, and our revenues and our EBITDA has been volatile in the past. So there has been a view, and with a company that is consuming cash, there's always a view that the company will always be in a position to require capital to fund its growth, which has been true, and we're hoping that will change in the near term. We hit profitability, so that is the reason why we continue to push into the North American market, while we are investing to build our infrastructure and our sales teams to address these new market opportunities, and that's where we think the stock price could potentially have meaningful change in terms of investors view the stock and how the capital markets will approach us. You have not addressed, next question, you have not addressed, do you share any recurring revenues, or does any part of your business or future plans call for recurring revenues? At the moment, we are a hardware company, so we can look at recurring revenue in a couple of ways. Number one, when we look at various customers, they all vary in size, of course, anywhere from 500 units to several tens of thousands of units in terms of opportunity. One company in particular has over 20,000 trucks in their fleet. They will not, of course, retrofit all their trucks at once. What they will do is likely do 1 or 2 trucks per quarter. So this will be a recurring type installment over multiple years to completely retrofit their fleet. In fact, that brings us to another point which I never touched on, but our products are backwards compatible with land mobile radio, so that opportunity is available to do that, so there's no disruption to your business. In addition, we do sell antennas and other accessories, cradles. These are all add-on adjunct products with great margins that work with our devices. They're all companion devices, and we have a portfolio of those. Over the longer term, as we continue to build out an install base of products, we will use our platform as sort of a play on software requirements. So if you want to download a management tool or a scheduling tool, we're hoping that we can work with software partners and get a small piece of that action. We've done that in the past, and we're hoping that's going to be a piece of our business going forward. Last question, I just have a few more minutes here. What is your view on 5G, and will this help or hurt your current 4G products? At the moment, customers are not requiring 4G. 5G, as much as the carriers like to make marketing movements about 5G and with their coverage capabilities, the reality is for in-vehicle solutions, it's really not a practical solution. 5G is better suited today to in-building where there's pure clean line of sight and no disruption with rain or falling leaves. We do have a 5G roadmap, and we are working early on some of our 5G products. I don't believe this is obviously not going to hurt our products. We think 4G will be around for a long time. I'll give you one data point. AT&T continues to invest in their 4G infrastructure for the next 10 years. They plan to invest millions of dollars to continue to build out what they call densification, not only through FirstNet, but building out all their antennas to provide consistent 4G connectivity. So we think our current 4G portfolio will be with us for a long time, and there will be a migration to 5G, but certainly we don't think it's going to displace 4G at any time soon. And that was the last question. It looks like I'm out of time, so thank you very much for your interest in questions. Thanks so much.